And we believe globally that opportunity will scale from zero today to $8 to $10 trillion in revenue.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of ARK Invest, Cathie Wood, giving us a recent market update and investment thesis for 2023 and how ARK Invest plans to capitalize on the tech sector this year in what will soon be a $1 trillion revenue stream. Despite cyclical fluctuations and competition from industry giants like Tesla and Google, Wood maintains a positive outlook for tech titan Nvidia because of its impressive relative valuation compared to other AI players and its strong position in the market. Wood elaborates on the reasons behind her company's recent decision to sell its Nvidia shares, even though the stock has gained significant recognition and value. She also expresses confidence in a short-term deal regarding the debt ceiling in the United States and how the rise in inflation is soon coming to an end. Let's check out the latest interview with Cathie Wood as she lays out the winners and losers in 2023 and what the second half of the year will hold. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We're very positive on NVIDIA. We have been very positive on NVIDIA. We bought it down when it hit nearly $100 in the fourth quarter last year. And then it tripled as some of our other AI-oriented stocks stood still. So, we're looking at, believe it or not, many people do not believe this about us. We're looking at relative valuations of names in the AI space. And we were looking at NVIDIA at 25 times sales, which is where it is. And Tesla, which is probably the biggest AI story out there, is at 6 times earnings. UiPath yesterday, not earnings, 6 times sales. UiPath yesterday reported it is a beautiful AI play. It too is at 6 times sales. And as far as NVIDIA goes, there are a few reasons we take some pause. It still meets our minimum hurdle rate of return, so 15% at a compound annual rate over 5 years. And so you'll see it in some of our more specialized portfolios. We're looking for the better values, but the risks to NVIDIA would include cyclical. When I hear shortages about GPUs or anything, I begin to think about the cyclicality of a group. Competition. Tesla is coming up with its own chip. Meta Platforms, Google, their own chips for more specialized large language models. And then the tech itself. We're learning from Meta Platforms, the Llama model is able to do with less computing power, but more data. It's able to deliver better models. So there are puts and takes here, as there always are. People who understood the NVIDIA story, we were pounding the table on it on 2014, really till 2021. And many people actually put it into their own portfolios, and they may have held it. We have not gotten much pushback. And the reason is people know that we are on AI, but we're doing it in a little bit of a differentiated way. NVIDIA has become a check the box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise. So we're just pivoting to another set of plays that most people have not discovered yet, much like they did not understand that NVIDIA was an AI play really until very recently. We believe Tesla is building. It has more data. Talk about proprietary data. It has more data of real world driving miles than all of the other auto companies and technology companies like Waymo put together around the world, we would say, except for perhaps China, because we don't know exactly what's going on there. And we do believe that the autonomous taxi platform opportunity is a winner take most opportunity. The company that gets a person in an autonomous vehicle from point A to point B as quickly quickly and safely as possible is probably going to get the lion's share of the market. And that company will, in the United States, we believe, be Tesla. And we believe globally that opportunity will scale from zero today to $8 to $10 trillion in revenues by 2030. So you can see why we're so excited by Tesla. It is the furthest advanced from an AI point of view, and it's even becoming a manufacturer of factories using artificial intelligence and becoming more and more and more efficient in manufacturing factories and cars. We think it's the most efficient in the world right now. Our history with China after COVID was we plowed in during COVID because we liked what China was doing from a monetary and fiscal point of view. They were not overdoing it. And then, of course, we entered the period starting in November of 20, where, managements were basically banished from their companies, and there was one restriction and regulation after another. And so we've pulled away quite significantly. Common prosperity, it seems, means very low profit margins and services that reach into tier 1, tier 2 cities. So JD Logistics and JD, we have some of that, but we have minimized our exposure until China basically seems more inviting to capital once again. With our 5-year investment time horizon and having been around this block a number of times, we know they're going to come to a deal. They are not going to deprive government employees of their paychecks, Social Security, so retirees of their paychecks. It'd be politically disastrous as we're heading into this election year, and already the field has heated up so significantly. So they're going to get through this. It's a very short-term phenomenon. It might be a short-term fix, and hopefully they do get serious about this at some point in time, but we don't think now is the time. When history books are written, we'll look back at this period and we'll see the sharp rise in inflation, which was caused by massive supply shocks from COVID and the war in Ukraine. And you will see, sharp increase, and it feels like it's so slowly coming down. But when you start looking at these charts in history, this decline will look very like it was very rapid, and we will descend into deflationary territory. Don Luswin wrote a piece, it was an editorial in the Wall Street Journal, I believe, about this. And I think the Fed is going to be blamed for sending us into a deflationary period.
Wood states that ARK Invest's investment approach extends beyond widely recognized opportunities. She expresses her unwavering belief in Tesla and its immense potential in the autonomous taxi platform market. Wood also highlights Tesla's advantage in terms of proprietary data, having accumulated more real-world driving miles data than any other auto or technology company. She predicts that Tesla will dominate the market in the United States and globally, as the autonomous taxi platform opportunity is expected to become a $1 trillion revenue stream by 2030. Reflecting on her early support for NVIDIA and the tremendous success it brought, she notes that in the previous year's fourth quarter, when NVIDIA's stock price dropped, ARK Invest seized the opportunity and made a strategic investment to sell before the boom-bust cycle began. Overall, Wood criticizes traditional economic statistics and emphasizes the importance of gross domestic income as a more accurate measure. What do you think about Cathie Wood's latest prediction for 2023 and what we can expect in the market in the coming months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.